Jiwei Zhang is the president and chief economist at Pinpoint Asset Management, are joining us with his take on things. Jiwei, how are you reading into the services data, which still seems very stable, and manufacturing seems to be slacking at a time when you look at the export growth, the import growth numbers, they've not been so off.
That's right. I would say, look like all these indicators, a lot of mixed signals, but the general message seems to be a stabilization, except for the property sector. Now, the consumption side, the retail side, numbers are not great, but they're now falling out of the cliff. If you look at the sequential growth, they are okay, I would say. Export has been helping manufacturing side. I mean, domestic demand, you observe, inventory building up in some of these sectors, but I think the external demand is still pretty strong. So China managed to rely on the exports to at least sustain the production onshore. Now, the 1 weak spot that we worry about is property, and we haven't seen any signs of stabilization yet. We've seen a little bit of change of policy, so that's encouraging. But people are all waiting for the first sign of stabilization in the property sector, which would be very important.
And what would be the early indication of that? Do you think it would be coming through a price stability, where we have seen home prices continue to decline?
Yeah, price stability and also property sales, because we observe very high frequency data, right? So weekly data, or even sometimes, anecdotal evidence of a new property launch in some city gets sold out very quickly. That kind of signals would be very helpful. But I think in the past few days, the market has been focusing on the signal coming from the Politburo meeting last week, that the government started to talk about, they need to deal with the inventory of unsold properties. That is the interesting signal. They haven't talked about it before. Whether they will do something, maybe setting up some facility to help the developers to sell those property, we don't know. I mean, I think the market is waiting anxiously to find out what the government really means about that.
So, can I just ask you, because in terms of how you look at I suppose, say, let's just call it the last quarter's worth of data coming out of China, have you seen anything that would, if everyone's concerns were purely on the economic standpoint, have you seen anything that would justify, purely based on economic data, the rally we've seen in the Greater China mainland markets of late? Has there been that much of an incremental improvement in your mind as to the health of the Chinese economy?
Yeah, good question. I get asked quite a lot recently. I would say the economic momentum, if you just look at the data, right, fundamentals, it stabilized. I think in the past 2-3 months, there has been some green shoots, right? So that PMI data and so on. Particularly, the really strong data points is on exports that help to boost investor sentiment. And we've seen global investment banks revising up their GDP forecast for China for this year. I think that revision happened about in early April. That I think to some extent helped to boost the sentiment in the market. But you're right, the change in the economic fundamentals is not huge, right? So, but the rally in the market is much stronger than that. I think it's a change of sentiment that turned from super bearish to right now, I would say neutral. I wouldn't say that the outlook for the economy is very bullish or a very sharp V-shaped recovery observed. It's not like that.